The first is, of course, we know we're in the midst of a downturn for crypto prices. Bitcoin and Ethereum are the ones everyone is watching because they're the two largest. And Bitcoin, of course, is the flagship. I think we are so close to the bottom here, especially for Ethereum. I mean, the bottom could be happening this week or within the next 4 days. And from there, we are going to have, I think, a V-shaped recovery because of the liquidity that's coming as the shutdown has ended, the US government shutdown. And also because the central bank, I think, is tilting dovish, especially with the potentially new Fed chair. That, I think, should propel prices very strongly into the end of January. And that's where I think Ethereum, could be 7,000 to 9,000. And I believe Bitcoin is going to recover to past its all-time high.
As we look toward the horizon of 2026, the macroeconomic setup presents one of the most attractive risk-reward profiles we have seen in years. We have endured tight monetary policy for 3 years, but with the prospect of a new Federal Reserve chair and inevitable easing, we are preparing for a significant unleashing of monetary liquidity. This acts as a massive tailwind for risk assets. The business cycle has been notably muted. Specifically, the ISM Manufacturing Index, a primary gauge of business activity, has languished below 50 for 36 consecutive months. This is the longest stretch of contraction in the history of the survey, driven by inflation, policy uncertainty, and tariffs. However, historical data suggests this compression is temporary. While sentiment remains deeply negative and investors are hoarding cash, this skepticism serves as a potent contrarian indicator. When the herd is bearish but liquidity conditions improve, the market is primed to move aggressively against the consensus.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
When I look ahead at 2026, I think it's a really attractive setup. Monetary policy's been tight for 3 years now, and we're just beginning to get some easing, but we also have a new Fed chair, and I think that the idea is to unleash and improve monetary liquidity. That's a big tailwind. The business cycle has been muted for the last 4 years. The ISM Manufacturing, which is a measure of business activity, has been below 50 for 36 months. It's the longest stretch below 50 in the history of the ISM survey. It shows you business confidence has been muted because of inflation and then Fed tightness and then policy uncertainty and tariffs, but that all clears next year. And we know that investors are very skeptical because sentiment remains negative and people talk about an AI bubble, but measurable surveys like AAII show people are negative. And that's a contrarian tailwind because when everyone's bearish and they're sitting on a lot of cash, then if the market moves away from them, they're going to chase that. So I think that that's a formula that's very supportive of stocks next year. However, the timing is a little uncertain because we're coming off 3 years of really good gains. So I think that the first part of next year, maybe the market has to digest that a bit, but it should play out really strongly for the full year. Well, crypto's been disappointing the last few months because prices are down a lot. And when prices are down, first of all, we know the mood turns really dark. People get second guess, especially because price is so important as a signal in crypto. And now people are really worried that this is the start of the 4-year cycle of the downturn, which might last a year. So that's at the back of people's minds. But I would say people should be wary that price isn't always signal, because there's times when there's fundamental developments that are really building. And I see this in equity markets all the time, while price remains skeptical. I think we're in one of those moments because Bitcoin has become an institutional asset. So that's very different than the last 10 years. Well, really 15 years for Bitcoin. It's for the first time has a different buyer. And the US government just about to finalize the Clarity Act and some action regarding the Bitcoin Strategic Reserve. That's a brand new buyer. And on Ethereum specifically, there is a huge runway coming because of stablecoins, which is a tokenization of a dollar, but it's just the start because we know that BlackRock and Robinhood and everyone else wants to tokenize everything on the blockchain. That's a big unlock of activity, which is going to happen regardless of whether prices of Ethereum and Bitcoin aren't going straight up, because these are innovations in financial products. So I'm in the camp that we have not really seen the peak associated with a 4-year cycle. In fact, in some ways, because of muted monetary liquidity and all the suppressed animal spirits, the market's been super concentrated this year. I think that the best prices are going to be seen next year for both Bitcoin and Ethereum. The way this is ultimately proven is if Bitcoin makes a new high before end of January, which I believe will happen. But we did talk about that in the most recent BitMine chairman's message from November, that we looked at things that could explain the 4-year cycle of Bitcoin. In the past, what peaked that explained why Bitcoin was following that cycle? The two things that really explain Bitcoin's price peaks that were not time related, like not just saying the clock, was the copper versus gold price ratio. That makes sense because it's industrial activity versus monetary base. That has always peaked in coincidence with the past peaks of Bitcoin price. But copper to gold has actually been at a low right now, meaning we actually haven't seen copper gold peak. Why is that? I think part of it has to do with stablecoins buying so much gold this year. They are the single biggest buyer of gold. They've driven gold to an all-time high. And that means there's a huge move coming in copper. The second is, then that will mark the Bitcoin peak. The second is the ISM. ISM has always peaked in coincidence with the Bitcoin price peaks in the past. But as I mentioned earlier, ISM has now been below 50 for almost 40 months, the longest stretch in history. Until the business cycle and industrial cycle peak, I don't think Bitcoin's going to peak in price. I'm really looking forward to being at Binance Blockchain Week. It's happening in exactly the place you'd want it to, which is Dubai, where there's so much crypto innovation taking place. But also Dubai is where a lot of AI hyperscaling is going to take place, and even a lot of compute. And we know that crypto and AI are going to start to intersect in the agentic world. So I think it's an ideal place. I think what people are going to hear from us is really this vision of why crypto is entering a much different phase where it's becoming central to the economy. Up until now, Bitcoin and Ethereum and altcoins have all been a story of price, and it's created a lot of wealth, and it's really drawn in a community of dedicated people, but it hasn't created products that have actually worked in the real world. I think that's finally changing, and that's what makes the next 5-10 years so exciting. The first is, of course, we know we're in the midst of a downturn for crypto prices. Bitcoin and Ethereum are the ones everyone is watching because they're the two largest, and Bitcoin, of course, is the flagship. I think we are so close to the bottom here, especially for Ethereum. I mean, the bottom could be happening this week or within the next 4 days. And from there, we are going to have, I think, a V-shaped recovery because of the liquidity that's coming as the shutdown has ended, the US government shutdown. And also because the central bank, I think, is tilting dovish, especially with a potentially new Fed chair. That, I think, should propel prices very strongly into the end of January. And that's where I think Ethereum, could be 7,000 to 9,000. And I believe Bitcoin is going to recover to past its all-time high.
Despite the favorable macro backdrop, recent price action in the crypto markets has been disappointing, leading many to fear the onset of a prolonged 4-year cyclical downturn. However, sophisticated analysts must distinguish between price and signal. We are witnessing a fundamental divergence. While prices retrace, Bitcoin has solidified its status as an institutional asset, a structural shift distinct from the last 15 years. The real story is the expansion of stablecoins and tokenization by major entities like BlackRock, creating a massive runway for networks like Ethereum. Simultaneously, we are closely monitoring Bitcoin dominance. Historical patterns from 2017 and 2020 indicate that dominance tends to find a floor in September before rallying aggressively. Even if the broader market corrects, Bitcoin dominance typically surges as capital flees altcoins in a flight to safety. If we strip away stablecoins, Bitcoin's market share is already approaching the critical 70% level, suggesting the market is far more concentrated than headline metrics imply.
We said to expect a low in September and then to watch Bitcoin dominance go up. Right now, it's been dropping, and obviously it's led to like a little, like discontent with how things are right now. And because the whole idea, right, is that altcoins will bleed to Bitcoin no matter what. Like if Bitcoin's going up, alts bleed. If Bitcoin's going down, alts bleed. The last 2 weeks, obviously, Bitcoin dominance has dropped. But we've also kind of identified that this is a common thing that Bitcoin dominance does. And you can even see that it did it here in 2020, right? Like it found a low in around September. It then was basically only green into early November. And then it got a 2-week correction and then went up again, right? 2017. Same thing, right? You found a low in September. It was basically up only. And then you got a 2-week correction or so in early to mid-November. And then it went up again. And in both of those cases, it rallied to 70%. I'm not saying it has to rally to 70% this time necessarily. If you look at USDT dominance plus USDC dominance, one of the things you'll notice is that it itself is at around 8%. So without stablecoins, Bitcoin dominance would already be a lot closer to that 70% level, right? You could think about it as like the flight to safety. But the point is in recent times, obviously it was a little bit different earlier on in the cycle, but in recent times, they've actually been highly correlated, where stablecoin dominance goes up as Bitcoin dominance does, and then they drop together, right? Up together, drop together. And stablecoin dominance, you can see, went up, a correction, and then it went even higher. And I got to think it's going to happen, And if you believe that, right? Like, if you believe that it's going to happen, then we got to talk about how exactly does it happen? Now, remember, in 2019, which we've made plenty of comparisons to, you've probably heard me say 2019 enough for the rest of your life. You probably don't want to hear the year 2019 anymore, But what I still go back to is how dominance still surged into the end of quantitative tightening. Even though, even though QE began, Bitcoin USD topped out before this. And you still had that surge by Bitcoin dominance, right? So we got to talk about path. How does Bitcoin dominance go up? If we're right about it. I mean, there's no guarantee that I'm right. Like, maybe I'm wrong. Maybe this is where it all breaks down and the dominance train comes to an end, and maybe I'm holding on a little bit too long. I was accused of that many times throughout the Bitcoin dominance bull market. Maybe this is the time that they're finally right. But we got to think about how, right? So the first thing to think about is under what conditions, right? So for Bitcoin has now dropped below the 50-week moving average, and it's pretty far below it. Now, is there a chance we could get back above it before the weekly close is over? Yeah, but it also makes sense mentally to be aware that the top could in fact be in, right? Like I'm not saying it has to be, but I would say like there's probably a 70% chance at least that it's in. It's not a big deal, right? Like bear markets happen and we live with them. The real money's made in the bear markets. The real money this cycle was not made by the people who bought Bitcoin, during these times. It was made by the people who bought Bitcoin down here. The real money is made in the bear market. You just have to wait. You buy it and then you wait. So view them as opportunities, if anything. is what I would say. But we have to be aware that, like, that could in fact be the case. And if you look at Bitcoin's market cycle ROI from the low, and you just look at this cycle compared to the last 2 cycles, like, it wouldn't be that crazy to say that, all right, what if that's the top right here, and it would have happened right kind of in between the last 2 tops in terms of ROI from the low. So we have to think about that path as well. Like, okay, one path is, does Bitcoin dominance go down if Bitcoin USD goes down? And then we have to think about, well, does Bitcoin dominance go up if Bitcoin USD goes up? And I got to think, yeah, it's either case. And the reason is this. If Bitcoin were to go back up, whether the all-time high is in or not, right? Imagine there's a scenario whether we do put in a new all-time high. But regardless, Bitcoin dominance should go up in that environment. And the reason I say that is because when you look at all prior times where Bitcoin USD had sort of like a drop into a low, and then you look at, like, what did it do as it rallied back up to a new high, you can see that Bitcoin dominance went up during that time period, right? And you can even look over here, like, what did Bitcoin dominance do from that level to then when it rallied up to that new high, and it got rejected there, and then it eventually broke through right here, you can see that Bitcoin dominance went up. And that's because Bitcoin leads the bull market. So I have to believe that if the top is not in, then Bitcoin dominance would get a massive move on a major Bitcoin rally, right? And it would lead to some type of, like, parabolic blow off top after everyone else has given up.
Synthesizing these factors, we view the current downturn not as a cycle end, but as a digestion period before a liquidity-driven recovery. The intersection of blockchain innovation and artificial intelligence, particularly in hubs like Dubai, points toward a future where crypto becomes central to the real economy, rather than just a speculative vehicle. We anticipate a V-shaped recovery as the central bank tilts dovish. For investors, the strategic imperative is patience. The real returns in this asset class are generated during bear markets and periods of fear. While the timing remains uncertain, the structural indicators suggest we could see Ethereum reprice between $7,000 and $9,000, with Bitcoin surpassing its all-time highs. We are likely witnessing the final flush before the industrial and liquidity cycles align, marking the start of a robust expansion heading into the next 5 to 10 years.